Welcome to the Corporate Treasury 101 podcast. Today, we talk about PoBo and CoBo. What is even that, you may ask? PoBo CoBo are the acronyms for payments on behalf of and collections on behalf of. Who better than a former treasury consultant who has implemented PoBo CoBo structures for clients to speak about this topic? Laurent Geunitz was a manager in the treasury practice of a Big Four consulting firm and is now the global treasury leader at Punch Powertrain. Needless to say that he is a seasoned treasury professional with a tremendous amount of knowledge, in particular when it comes to in-house banks, treasury systems, and PoBo CoBo. In the episode of today, expect to learn what is PoBo CoBo in the first place, what are the benefits for corporates to have such a structure, what are the restrictions to be taken into account, how to implement a PoBo CoBo structure technologically, resources and location-wise, the type of structures Laurent has implemented when he was a treasury consultant, whether fintech can have an impact on the world of in-house banks and PoBo CoBo, and much, much more. Laurent is amazing. He has such a deep understanding of complex treasury processes, structures, systems, and yet is able to break them down into very understandable manner. I really enjoyed our conversation with him. If you do as well, please consider leaving us a review. We got some amazing reviews lately on Spotify, and now that Hosam and I are tremendously grateful for that. This is the best way to help us, basically, along with sharing the episodes to the people you think might be interested. Last note, before diving into our fascinating conversation with Laurent, we are now on LinkedIn. If you would like to reach out, suggest a topic, ask a question, or simply say hi, we will be happy to have you. Just look for Corporate Treasury 101, that will be us. With all that being said, please welcome Laurent Geunitz. Can you maybe start with introducing yourself and explain us what you do?
Hey, Guillaume. Of course, absolutely. And first of all, very happy to be here and to be able to participate to this podcast series. So my name is Laurent. I'm the corporate treasury manager of Punch Powertrain. Punch Powertrain, it is a bit known in Belgium, let's say, but of course not outside of it. But shortly, we are the independent dynamic leader of innovative transmission and propulsion systems for automotive industries and mobility providers globally. Mainly focused, let's say, on three types of transmissions, which is, first of all, the conventional transmission. Most of you know it because it's a transmission that's in your diesel car, let's say. But short while ago, of course, Punch Powertrain has been moving as well to hybrid solutions and then also to full EV solutions, where we are working on integrated drive units, power electronics, reducers, and those kind of items. So that was maybe very short what Punch Powertrain does. But of course, if anyone would like to know a bit more, they can go to the website.
100%. We'll put the link in the description. And just for my own curiosity, because it's a little bit known in Belgium, but I guess this is, the market is worldwide, right? Where are your activities exactly?
It's a bit globally, actually. There's a big portion in China, but there's also, let's say, a market in India, and we're working with some joint ventures here in Europe as well. So we are really going, very globally. And when I mentioned indeed, it's a bit known in Belgium. It's mostly because a few years ago, Punch Powertrain was the enterprise of the year, and that's why most people still remember it.
Awesome. Okay, well, the topic of the day is not directly related to Punch Powertrain, but I guess your position will allow you to say a lot about it. We would like to break down what PoBo CoBo is. So maybe to begin with, I'll just break down. PoBo would mean payments on behalf of, and CoBo, collection on behalf of. That's more or less where my knowledge stops. So Laurent, can you enlighten us and explain us what PoBo means exactly?
Yep, absolutely. As you already mentioned, PoBo is the abbreviation of payment on behalf of. Mm-hmm. And very short, it's actually where an entity, which will be mostly a central corporate, will perform a payment or it will pay an invoice to an external bank account. And the invoice that's going to be paid is mostly belonging to a subsidiary of the corporate's central entity.
Okay. And so why would the company use this in the first place? Because it sounds like a bit of a complicated scheme.
There are, let's say, a few reasons why you would use PoBo and CoBo, of course. So we can maybe split it up in what is the added value of PoBo, CoBo, what are the key drivers, and what are the enablers. Starting with the added value, of course, it's the fact that you can reduce the amount of bank accounts that are needed, which indirectly also means, of course, a cost reduction of bank charges and general overhead costs. Secondly, it helps with an improved cash visibility, because when you will pay from a more central account, you know, of course, what is going on in that account. You see more payments going out, you see for CoBo than payments going in, and it gives you a better cash visibility. Thirdly, we can also talk about, let's say, a better risk management and better centralization of control. If you centralize your payments, of course, you can also centralize your risk. And I'm thinking here about FX risk, for example. If you have an entity in Belgium that has to make a dollar payment, there's no need anymore for every entity that has to make ad hoc a dollar payment or a GBP payment to open a bank account in that currency. So if you have an in-house bank which has a bank account in that currency, they can just make the payment for you, which makes it, of course, easier, because then you can, the exposure that you have can also be managed centrally. And a fourth reason, also I think worthwhile mentioning, is that it can simplify operational processes. And especially if it's well implemented, it allows for, let's say, technology simplifications and a lot of scalability.
That sounds like there are a lot of topics to tackle in there, Laurent. Amazing.
Yep, absolutely.
Maybe to come back on one of the terms you mentioned that I'm quite intrigued about, in-house bank. What is that exactly?
Yeah, an in-house bank. As you mentioned, it's very linked to PoBo CoBo. Mostly when you will do PoBo CoBo, there will be an in-house bank setup behind it, because you will make a payment in name of a subsidiary, but you want to track, of course, who you made the payment for. And that's mostly tracked on an in-house bank. An in-house bank itself, it's mostly just, it's an internal bank, as we call it, but we have to be careful because it's not a bank in the classic sense. So it's only used for funds, and it lends all the funds that it has available to its subsidiaries. And what is the benefit here compared to, let's say, a normal bank? It's also that there's no control of financial supervisory authorities. So you see there that you can control all the cash within the group, and it helps you to use the money more efficiently and also cheaper, because the capital that you use is already belonging to the company, and you can easily lend it to a subsidiary without having to go to a bank. So there's no need for all the bureaucratic setup. You can just say, okay, I'm, let's say, a US corporate. I have a Belgian entity. I need 300K. Goes a lot quicker than having to go to your bank in Belgium, say, I need this loan. Can I use it? What is the interest rate? Your treasury, which is managing that in-house bank, they know the financial situation of the subsidiary, and they can react very quickly to your request. Also, the rate that you can ask for it might be a few percentage points lower than when you go to your bank. You cannot ask whatever you want, of course, because there's the arm's length principle and the transfer pricing, but it just allows you in a quick way to get at a lower cost the loans that you need, and so on.
Okay, what do you mean with arm's length exactly? And transfer pricing, what are those terms?
Yeah, of course. First, looking maybe at arm's length. In short, the definition of arm's length is actually just saying that we're going to compare it to something else, and we're going to see what we are using is the same as our benchmark. And that benchmark, it can be a lot. Mostly in the treasury world, it's compared to deposit rates. It can be a yield curve. It can be lending rates published by a central bank. But basically, we need to be in line with the benchmark. That's the arm's length nature, which is just to avoid, of course, that when you have an interest rate in the market of 4%, that you will borrow money to your sub for free. There's also a lot of tax reasons behind that, but that makes it, I think, already really complex, and it might even be good to have a separate series specifically for the tax backgrounds.
Now it's anchored. Laurent, you said it. So you will receive probably an invitation for another episode on arm's length.
Well, to be honest, I don't know tax-wise and arm's length if I'm the best, but
that's
of course, always very happy to help.
But so you mentioned earlier that there was no control or supervisory authorities when it comes to in-house bank, which is super interesting. I'd like to dig into this. But to a certain extent, especially regarding the arm's length, you have, right? You need to apply more or less the same pricing. So instead of having a product that you contract with your bank as a corporate, you contract it internally. So one entity of the group will contract a product with another entity of the group, but the pricing needs to reflect more or less market practice, not to have unfair competition within the company or something like this. Does that make sense?
Correct. Yeah, correct. And also not only within the company, but just globally, it needs to be in line with what is really happening in the markets.
Makes a lot of sense. Okay. And you mentioned capital. Does that mean that the in-house bank, I'd like to dig a little bit into this as well, but the in-house bank in the end is limited in terms of capital to the cash that the company has then, if it acts as its own bank, but is only limited by the amount of cash it has, right? Or how does it work here?
No, that's right. Well, actually, yes and no, to be honest. Let's first start with the in-house bank quickly. PoBo CoBo is a part of it, but it goes a lot further. You can also put cash pooling in place where you will centralize all the cash within the group. So basically, entity A, B, and C have excess cash. They will give it to the in-house bank, so to the header. And company D needs cash. And that money can be used to lend it to company D. Of course, you can also go for external cash. The in-house bank itself, if really needed, they could go to the market and say, okay, I need cash as well. And then they can borrow and use it internally. So it just gives the opportunity to centralize all the processes and to make sure that there's less exposure to the outside world. Instead of 20 different subsidiaries going to the market, you have basically one central point which goes to the market, which gives it a lot more leverage. I mentioned already, PoBo CoBo reduces the amount of bank accounts and costs.
Yeah.
If you can go to a banking partner, to your, let's say, your cash management bank, and you can say, okay, instead of having in Belgium an entity with 10 transactions and in the Netherlands one with 20, you can go with the whole in-house bank to your partner and say, okay, this will be the volume, and you will get better pricing than you would get as an individual entity.
Makes a lot of sense. Okay, hence the dimension of leverage. And last point you mentioned was, one of the first actually, was the fact that it's tracked in the in-house bank. Does it mean there is a kind of software, or do people manually write down on the paper, okay, I'm making a payment on behalf of this entity? How does it work here?
You can write it down manually, but it would take a lot of time.
but the digits are not so.
No, so you need to have, let's say, already a good size for an in-house bank to really be worthwhile, because it needs to be managed, it needs to be set up. Mostly it's maintained indeed by systems behind it. And what's important is that, you will have several systems that need to intertwine with each other. Mainly when you think about it, we think about a payment factory to execute your payments. You think about a TMS. The TMS can capture, for example, the positions, can help executing the payments before it goes to the payment factory. It can manage your FX exposure, your interest rate exposure, and so on. And thirdly, and preferably as well, there's an ERP system. So you can, in your TMS, you mostly have, let's say, a accounting module that can support you. And what is mostly seen in the market is that actually that TMS is creating the accounting entries or making some pre-bookings, which then get interfaced to an accounting system. So you have several systems working together to facilitate and to automate the process.
Okay. And the purpose of all this is probably to enable the tracking of all the payments that are made on behalf of other entities, that are going from source that is in the first place not meant to be, but I guess from a tax and regulatory perspective, it's allowed. And like this, you can reconcile properly who made what payments on behalf of whom. And then on top of this, you have probably current accounts, or how does it work in terms of okay, we made the payment on behalf of this entity, but the cash left from this bank account. So how does it work here?
Mm-hmm. Yeah, no, that's a good point. As you mentioned, it's like the header paying, so doing a PoBo transaction in name of the subsidiary. Yeah. And that transaction then is reflected on a current account. Or it can also be, let's say, a virtual account.
Okay.
And virtual accounts are a lot used for CoBo. So when you want to receive cash in name of a subsidiary, then you could get, let's say, a fake IBAN basically, so that the counterparty can transfer to that IBAN, but the money still goes on the header account. But you are able to track who the money belongs to.
Oh, okay.
And that's it. You see, there's different ways. It can be just a current account in your accounting system where you manually say, okay, this was coming from this entity, I book it on there. It can be based on payment instructions or payment information that you give, where the system can then automatically recognize, oh, this was a PoBo for this subsidiary, so I will book it there. It can be virtual accounts. There are a lot of solutions in the market.
Okay. And so just for the sake of it, because I know I struggled a lot with this notion when I started my consulting life in Treasury, current accounts, can you quickly break down what that is? Because I link it with bank accounts, but it's not really the same, right? So it's within a company. I know I'm the one who used the term in our conversation, but can you please break it down?
Yeah. So a current account for PoBo CoBo, it's an in-house bank account.
Okay.
It is just the bank account or the position account that you keep between the header of the in-house bank and the subsidiary. So that's in terms of in-house banking, a current account.
Okay, so it will be an account, so a numerical writing in the system, the software you use to register all your payment transactions, saying, okay, this entity, the header, made that payment for this amount in this currency on behalf of this entity. So therefore, this entity owes that much money when it settles once per month, once per year, whatever. That's
absolutely
super clear. So payment on behalf of, we have a group with several entities. There is one that will be the header. I guess it's like very central, so a finance entity probably, that execute payments on behalf of other entities, the subsidiaries, to enable all the benefits that you named at the beginning of the episode. Clear. CoBo, we quickly touched upon it, but I guess it's the same, but in reverse, right? Instead of executing payments, you collect money, and that enables, again, cash centralization, visibility, and savings in terms of bank account required. That's a proper summary?
Absolutely. That's indeed a perfect summary, Guillaume.
That is.
There is maybe one thing to mention here. It's that sometimes we have CoBo, or it is called ROBO, receipt on behalf of, but they actually mean the same thing, but depending on which company you are at, sometimes they use CoBo, sometimes ROBO.
Okay, so I didn't even ever heard of this term. So ROBO, why would you? I guess there is a small difference, right? Otherwise, there wouldn't be two different terms. What would be receipt exactly?
Receipt on behalf of it's the same. So it's like a collection, but you just get a receipt. It's a different wording for the same item. And of course, if there would be anyone listening that says, okay, there is a small nuance, we would be happy as well to get the background and information.
Perfect. Enlighten us. Leave a comment in the section of this episode or on LinkedIn directly, and I'm happy to take it. Awesome. Maybe now entering in technicalities of it. PoBo CoBo be set up regionally, or should it be, or can it be worldwide? How does it work exactly in terms of region you can cover?
It depends a bit on the structure of the corporate. It can be worldwide, but it can also be regionally. And it really depends a bit on how is the globalization of the company? How many countries are you located in? What are also the local restrictions? It isn't possible in every country to set up an in-house bank or to perform PoBo CoBo. It's also not always allowed. Like in some countries, tax payments and salary payments, they must come from a bank account located in that country. So giving an answer to the fact whether you have to do it at a regional level or a worldwide level, it's a bit nuanced, let's say, and it really depends case to case. And that's why there are, of course, a lot of consultants helping on this and working on this, so that whenever you have a question about this, that they can always guide you in the right direction, taking into account the localization of the company and also, of course, the tax requirements and so on.
That's interesting point. Why? I mean, do you know why would certain countries say, look, if you want to execute salary payments and tax payments, it needs to leave from a bank account located in our country? What would be the rationale behind this?
Yeah, it's actually a good question. I would need to.
No, perfect. It was just out of curiosity, because why would they? Probably to keep the cash within the country. That could be a reason.
Yeah, indeed. In China, it's mainly the reason indeed to keep cash in the country.
Okay.
They have a very strict, let's say, currency policy, and for them, it's they don't like to give away control, so they don't like when money is flowing out and in of the country, and they want to know what is happening. There are, of course, for in-house banks, which again not really PoBo CoBo, but there are cross-border solutions, but that's always a bit more technical and complex. But mostly it's indeed that there's a tax reason behind it, a currency control behind it. You see, it really depends a bit, and you always have to thoroughly investigate why something can be done or if it cannot be done. It can also be that you have, let's say, a tax treaty or with the government, you have an agreement on something. And that's why for you, it becomes, more beneficial to be in country A instead of country B.
Okay. That's super interesting. Okay, so we could imagine that restriction will be more or less linked at least to the countries where the currency is also restricted. So to name a few, you had China in mind. I'm thinking about quite some countries in Latin and South America.
Mm-hmm.
Those are economies where currencies are restricted, and therefore those types of practices will be less easy to set up or even impossible.
Yeah,
okay,
correct.
And that's the perfect transition then. In terms of locations, is there any that's up by corporates to set up the in-house bank? Where, of course, here focusing on PoBo CoBo, also interested into the in-house bank aspect. But first, where do you want to put your PoBo CoBo center exactly? If it's regional or worldwide?
Again, here it depends a bit on where is your, let's say, your company located. First of all, you'll always take a location where you have a company. If, let's say, you have subsidiaries or you have your entities in Belgium, the Netherlands, the UK, you will probably not set it up in Germany unless there would be a significant tax benefit or a reason why you would do it. So it depends. And then secondly, it also, you look mostly at where is my treasury team located. A lot of the time, your treasury team is located in a location already for a specific reason. Okay. So it makes sense to check there, is it worthwhile to keep your treasury center there and to also set up your, let's say, your in-house bank or to start doing your PoBo CoBos there.
Makes a lot of sense. I guess that would be linked to tax and regulations, right? You want to have treasury centers where operations are execute, potentially you centralize certain cash. So that's where you would like to focus your treasury centers.
Yeah, correct. And also, if your in-house bank, for example, would make a profit or a loss, you want to see, of course, do I pay taxes on that? Yes or no? And where is it most beneficial?
That's a super interesting point. Does an in-house bank, because I guess the in-house bank is, its main function is to support the business, right? So how would it make benefits exactly?
When an in-house bank, it depends. You have an in-house bank, which can have several functions. It can be just purely an in-house bank that is supporting cash pooling, PoBo CoBo, but it's not taking on any FX risk, any interest rate risk. So you push it down basically to your subsidiaries, but you can also make it bigger. And then, you're coming in a situation where you're saying like, okay, the in-house bank will be taking over the exposure from the subsidiaries. And they're mostly, the in-house bank will get paid for that. So they will get a small margin, or the interest on your in-house bank position might be increasing a little bit. So depending on the function of your in-house bank, it could be that there's a different interest rate. And with that interest rate, it could be that your in-house bank is, let's say, earning a bit of cash.
Okay, that's amazing. Even if you are at arm's length, as we said earlier, actually that will be the reason. Because you're at arm's length, you're also meant to make benefits when you lend money to one of the subsidiary, and you will collect the interest.
Yes,
super interesting. Is there such a thing as management fees for an in-house bank, or is it not something common?
Well, I have not seen it a lot. Mostly it's embedded in, let's say, the premium that is asked on the in-house bank position.
Okay.
But I would imagine that it could be indeed that there's a management fee on top of it.
That's super interesting. Okay, so treasurers can actually make money within the company. Are there any substantial cost savings when it comes to PoBo CoBo? You mentioned that you could save on the bank accounts that you don't need to open for certain subsidiaries. What are the more overview of the quantitative aspects and benefits from having a PoBo CoBo structure?
Yeah, the main benefit, of course, will lie, as we discussed at the beginning already, in the fact that you have there's a need for a lot less bank accounts. And you can do a lot of cost saving because you have less accounts. You could do your FX hedging, let's say, at an in-house bank level. So Euro subsidiaries with US dollar payments, they can all be made by the in-house bank. And then they can make sure in the market that they're fully hedged against the exposure, for example. So it means that you can get better pricing on your FX transactions. You don't need, if we talk about 6 subsidiaries, you don't need 6 US dollar accounts. Or with a Euro account, you can just go to your bank and say, I need to make a dollar payment, but then the spread on that will be very high. Mm-hmm. So it's mainly, that are the main cost savings that you can have thinking about PoBo CoBo. Okay. And just think about it, doing less transactions, you can close a bank account, you don't have to make your fixed trades. If you're a large multinational, this amount can start adding up very quickly.
That links to the fact that you need to probably reach a certain size, right, before it becomes interesting. It's because you are centralizing everything that you don't have to open multiple bank accounts and so on. Should company reach a certain size before the PoBo CoBo structure becomes interesting and or profitable in case they will make a little bit of profit? But let's maybe just focus on what are the requirements in terms of size in the first place to set up a PoBo CoBo structure?
If you want, you can do it actually at any size. Even a very small entity could do it, but then there will probably be a lot of manual work behind it. Mm-hmm. But you could indeed set up a structure even with let's say 10 entities. But it makes more sense once you can start leveraging the systems in the background. Yeah. So once you can start using a payment factory, a TMS, a large-scale ERP system, because that is the point in time that you can start working on a centralized team that is managing all those transactions. And that's when you can start leveraging technology, because the technology investment is not always that cheap. It costs a lot of money. So then it becomes interesting to say, okay, I want to put PoBo CoBo in place with the automation behind it, especially because if done right, there's a lot of scalability afterwards. If you do a lot of M&A or if you open a lot of new subsidiaries and it's implemented in the right way, it's almost plug and play basically, which saves you a lot of money. And it gives also a lot of, let's say, time savings within all the different teams.
Okay. You touched upon a very interesting point here, which is the team involved, because so we mostly think about treasury team, obviously, but when it comes to payments and even collections, that might be a different team, right? Within the organization, there is definitely an account payable team, probably an account receivables team when there is such a need. So what kind of teams are typically involved and or helps on the PoBo CoBo setup and tenants?
Yeah, absolutely. You're right. So it's not like the treasury team is going to, let's say, book the invoice and then going to pay it. So that's not how it works. If you look at the P2P cycle, an invoice is coming in from a vendor, then the AP team is taking the invoice and it's making checks. It's starting with, do I have everything I need? Do I have a VAT number on the invoice? Is it to the right company? Is there a PO number, a purchase order linked to it? Was it needed? Yes or no? They will make all those checks. They will then book the invoice internally in their system, probably put it out for approval. And then once approved, it will be the AP team mostly that will initiate the real execution of the payments. So they will say, okay, these are the payments I need to do for this entity. And then depending on how your system is set up, it could go to a payment factory or to an ERP system that is then sometimes, if you want to do PoBo, even automatically recognizing like, but wait, for this entity, I don't have a bank account in this currency, so please pay from another bank account. But the initiation stage there mostly is done indeed by an accounts payable team.
Okay, super clear. That makes me think of so we talked about netting on the podcast with Craig Chapman, and we were looking at intercompany netting mostly. Yeah, I can stop myself from thinking there must be something linked here. I guess PoBo CoBo will only be for external payments then, or do you include a netting cycle in that?
No, mostly it's really for external payments. Okay. As you mentioned, if you have intercompany payments, that will mostly happen via indeed a netting module, or it just happens over the current account without netting, but just lots of cashless settlements. You can settle in cash. You could say, I need to pay them 1 million euros, but instead of moving the cash and having to pay for a transaction, you can just say, we will settle it cashless and we will put it on the current account position.
Okay. The current account that we mentioned before, that's keeps position and like a record of what happened between each entity. So there is at least a record somewhere of who owes what and in which quantity. Okay, without entering into too many details, because I think we touched upon it, but what are the common tax and legal implications of PoBo CoBo? You named it. There are some countries where it's simply impossible, but will there be some countries where it's possible but absolutely not profitable from a tax perspective? I'm thinking like cash centralization might be an example of that, right? In Latin America, for instance, you can actually concentrate cash and have cash pool structures, but then you will pay a small fee for every sweep, so every fund transfer you will do. So it makes it non-profitable and therefore not operable. What are the implications in regards to this for PoBo CoBo?
It's mostly, as you mentioned, it's mostly tax related. So sometimes tax payments have to be made locally. Or there's an example like Japan, where it's very complicated due to legal tax restrictions to implement the PoBo. Okay. So there you really have to see like, okay, what are we going to achieve? What is my business case behind the implementation of PoBo in Japan? And is it worthwhile doing it? Similarly, in China, if you want to, in China itself, you can put up a cash pool, that's no problem. But if you want to repatriate the money to, let's say, the US or a different continent, it becomes a lot more complex. There are a lot of rules behind it. Okay. You can do cross-border cash pool in there. I'm not even talking about PoBo CoBo here, but just about getting cash in and out of the country. So there are, with free trade zones, there are some solutions, but there are strict rules behind it, which you need to take into account. So every time you want to implement a PoBo CoBo or a cash pool, especially in Asia and in Latam, indeed, it's very important to make your business case and to check, is it worthwhile, yes or no? In Europe and the US, you see it as a consultant probably a lot as well. The market there is relatively flexible. PoBo CoBo, it's getting more and more accepted and done, especially by the larger corporates, because there is a real benefit behind it. But if you go to Latam and Asia, you really need to make your business case to see, okay, what is the benefit of implementing PoBo CoBo for my entities that are located in Asia and Latam?
Makes a lot of sense. And so if we detach ourselves from the third parties that are the governments that will impose those regulation and tax, obviously, I'm wondering if there is any implications from a third party standpoint when I don't know, I want to collect money from the corporate that has a CoBo structure in place. I will expect probably a payment from a bank account in my own country, where the one I operate in, but then a payment from one of the treasury centers that is set up completely offshore or abroad. How does it work there? Is there any concern or things to keep in mind as a third party?
Mostly what you do when you have, let's say, a new relationship with a new client, you exchange information between each other already upfront. This is more, let's say, more what accounting is doing in your ERP system as well. But you set up in the master data of all your different systems, which can be in ERP, it can be in TMS, and so on and so on. You set up the client, and at that point in time, if you need to pay the money, they will ask you, okay, what is the bank account that you will use? And where will the money come from? Okay. And that way they know basically when they set up in their systems, they will set up you as a client. They know, okay, they gave us this account information, because most of the time as well, they will ask for an account detail signed by the bank. So basically, can you give the evidence that the bank account is in name of the entity? And at that point in time, you'll have to say like, okay, but my entity is called ABC. But the bank account I will use will be DEF. So at that point in time, you will already disclose that you will be using a different bank account.
Okay. And from your experience, that's not something that triggers, that maybe that's not the correct word, but like puzzles the clients. They're like, okay, but what is happening here? Because I mean, anti-money laundering and like frauds combat whatsoever is quite a concern for a lot of corporates in those days. So does that not raise questions when like, okay, you're going to pay me from DEF whilst I'm dealing with ABC? Or is that completely seamless once you've done the due diligence and you explained the whole process from your experience?
Yep, it should be relatively seamless at that point in time. Of course, if you start using bank accounts like from Cuba or Iran, it's a bit of a different story, but even the bank you will be executing the payment through, they will already say like, okay, what's going on here? But normally in, let's say in Europe and in the US, this, it's not a real big issue.
Okay. Super clear. You mentioned it for Japan. In regards to what's key is the setup, like how to probably install the PoBo CoBo structure. How does that even work in the first place? Because you mentioned TMS that is linked to the ERP. You usually need a payment factory, which for our audience, the term we sometimes use on the podcast is the payment hub. So it's an additional software to the TMS that makes the link between the treasury department and the banks. Usually it's one of the tools that is in the bank connectivity. But so how do you set up all this? If you say, okay, I'm a big corporate, now it's definitely worthwhile. I've made my business case and we need PoBo CoBo to achieve significant savings and also operational efficiencies and so on. How do you technically do that?
There are real complex ways to do it, but maybe to simplify it a little bit.
Yeah.
Mostly you have in your payment hub, as you call it, you have some sort of trigger or a rule that is recognizing that you're doing a PoBo. So it's, first of all, you have your technical system that you're building. And whenever your business case is made, you will need to identify saying, okay, for these entities, I will apply these rules so that the system knows automatically it has to use a different bank account for a payment, for example. And I'm sure that there are people listening, implementing payment hubs and payment factories that can give a lot more detail about it. But mainly it's based upon rules where you say like, okay, this entity needs to make a payment. And based on the rule, it will identify if their own bank account will be used or if another bank account has to be used.
Can it be that you set up a rule for an entity, but you set it up only for certain payments? You say, okay, we're going to execute PoBo, so payment on behalf of from the header for this entity, not for all the payments. Or once you set up the rule, it's for all payments, regardless of what goes out. Or how does it work here?
No, you're right. You could say mostly different types of payments are being recognized as well in the system. And so you can indicate whether it's an urgent payment, a non-urgent payment. If it's in the UK, for example, a BACS payment, there are a lot of different types of payments and you can identify them. Like payroll is also clearly identified. Tax is mostly identified. Urgent payments are identified. So based on that, you could build a rule that is saying, if it's this type of payments, then indeed execute via a PoBo. But if it's a salary payment for, let's say, tax and legal reasons, I need my own bank account, then just use your own bank account.
Okay, sorry. And so what are the next steps when you want to, so once you've set up the rule, what are the next steps in order to set up properly the PoBo CoBo structure?
Yeah, in the next steps, first of all, you will need some sort of in-house bank account or some sort of setup to be able to keep track of the PoBo CoBo positions between the corporate and the subsidiary you're making the payments for or you're receiving the payments for. So we can go very technical here, how it's done in specific TMS systems, but mostly it's just, again, in the system, a rule that is recognizing the PoBo even from the bank statement, for example, which is immediately saying based on those rules, like, okay, I know that this payment is done for entity ABC, put it on the current account of ABC. And then behind that current account, there will be probably an accounting setup, which is saying, make entry debit 123, credit 456, so that it can be interfaced towards a ERP system. And of course, in an in-house bank, the setup goes a bit further because you can have interest settlements. So you can do monthly, quarterly. What is the interest? Is it Euribor plus a margin? Is it something else? All that kind of stuff can, of course, be completely customized and set up exactly to the purpose of the corporates.
You would have potentially interest payments. What if, can this current account, based on the PoBo CoBo structure, so I know about transforming a current account into long-term loan, because it's been so long that within the cash pool structure, one entity was borrowing more than it was lending, so it turns into a long-term loan. Can this happen also the PoBo CoBo structure, or do you just settle the current account automatically?
No, it also, again, depends here on how the setup is done. Okay. The PoBo CoBo will create the intercompany positions, but if indeed at a given point in time, and that's again a tax discussion that you need to have, you're seeing that your subsidiary is having a borrowing position of over X amount for X amount of time, you could decide to convert that current account position indeed into a more long-term position. And that's an important difference. where you pay interest on your in-house bank, but there's a difference between the short term that you would do, the short-term borrowing, or when you would really have a long-term structural borrowing position towards the in-house bank entity. In that case, there are different arm's length principles because different benchmarks should be used. And in that case, you have to use a different interest rates. And for that, it should be normally in your treasury policies around the in-house bank, including the PoBo CoBo structure. There should be a policy to review these positions on a regular basis.
Absolutely. Could you have also, integrated in all this, the cash pool and the cash centralization structure? Because one entity keeps on paying on behalf of the other, but do not collect, for instance. So we just have PoBo, not CoBo. Well, one company will be short of cash at some point in time, right? So, but that will be not so much the case anymore if the collections of this entity also goes to the header, because I guess it will be the same entity, right? That you set up. The same entity would execute the payment on behalf of the subsidiaries and will also be the cash centralizator of a cash pool structure. Or am I completely misunderstanding here?
No, that's right. You could indeed say that you're making all your payments out of that central bank account, but also the collections for that same subsidiary could arrive on it doesn't have to be the exact same account, but it could arrive on an account held by the in-house bank. But it doesn't matter if you're paying from account A and receiving on account B, both in the hands of the in-house bank header. You can put it on the same current account if you want. So paying 100, receiving 80 would give you a position of 20.
I have a bit of a stupid question, but so let's say you set up PoBo CoBo, you set up a cash centralization structure in a country where you have very little tax or legal implications around this. As a subsidiary that is involved in both those processes, those three processes, PoBo, CoBo, cash centralization, you even still need a bank account then, because you have everything sorted out for you at the central level. Can it be?
Well, mostly every legal entity requires a bank account in its own country just to be able to basically set up the entity. So I see the idea where you're going, and technically speaking, if you look at it, it could be that you barely use the bank account, but there will always be a bank account linked to each legal entity.
I tried to go to the extra mile in terms of quantitative savings and optimization, but it seems that I'm restrained by the tax and legal regulations. But fair. Okay, going back to the setup. So we quickly touched upon the different software and technology that is required behind a PoBo CoBo structure. But so maybe just to summarize, you will need obviously TMS, so a treasury management system that would enable you to set up the in-house bank in the first place, right? The PoBo CoBo structure is part of the in-house bank. You need the ERP where you will have all the accounting entries, which mean you want to have a proper recording of all the accounting statements and what is happening accounting-wise for the centralizator, the header, and the subsidiaries participating into a PoBo CoBo structure. And last but not least, you have the payment factory, so the payment hub to actually send the payments, right? And actually in payments, in files, batch payments, because you can centralize this as well. Is my summary correct so far?
Yep, that's correct.
Awesome. Anything else you need to, I don't know, can you have like additional third-party systems or vendors that could, enhance the whole structure, or that could circumvent the need of a TMS or a payment factory for smaller structures? I don't know. Is there such a thing?
Yes. Yeah, you don't have to do it in-house. You can also do it, certain banks offer as well PoBo CoBo solutions with virtual accounts where they are in your name actually keeping track of all the positions and making sure all the payments are executed in the correct way.
Awesome. Okay, so I know of BMG who does the netting process, for instance, but you have also banks that could do a PoBo CoBo structure. Okay.
You have to take into account that they can do the netting if needed. They can do the PoBo CoBo. They can keep track of the accounts, which you can always access what are the positions. But the accounting behind it will mostly need to be done by yourself.
Okay. Plus, you might lose certain benefits of the PoBo CoBo structure in the first place because that is having it in-house and not leveraging any bank, so minimizing the fees and so on. Yeah, but that's a solution. Okay. Well, I was going to ask what's the role of external banks when it comes to PoBo CoBo, but I guess one of them could be, well, we do the PoBo CoBo for you. What else? Because you have your in-house bank, you have your current accounts where most of the magic happens, but then you still need to, well, send a payment from a real bank account, right? Any other implications for external banks?
No, I think that's the main point where you mention whatever you do, you'll always need a bank or an external bank because you're going to execute your payments and the bank is a part of executing payments, basically.
No, okay.
So there's no way around that. You'll always have to do it.
Yeah, and I guess you have the FX rates or like the exchange rate when you need to convert currencies in case you have a bank account on behalf of an entity, but you don't have the denominated currency or certain currency that you need to potentially do a spot. Super clear. I'm a bit curious. We try with Sam to get more and more fintechs and emerging technologies and innovations talked on the podcast. Is there any new digital solution or emerging technologies that can further develop PoBo, or are we at the the state of the art in terms of PoBo already? What's your view on that?
No, I think there's still, let's say, a lot of room for fintechs to provide and to develop solutions for all type of different corporates. It's a bit like in the TMS world as well. Different vendors, different, let's say, advantages and disadvantages, and also different sizes. Not every company fits with a certain TMS, and it would be the same with the fintechs. They most likely, well, not most likely, but actually most of the time, a lot of these fintechs, they're really focusing on a specific market, a niche market, for example, like looking at trade finance, looking at FX trading and that kind of stuff. So I think there is still some room there to facilitate the process and to make it more standardized. If you look at a big TMS system, the whole setup, it takes a bit of time and it needs to be well incorporated with your banks, with your ERP systems, with your payment hubs. But on the fintech side, there, I think, especially for not the huge multinationals, but for the companies right below that, there could be indeed a room for fintechs that are providing a more plug and play solution for corporates that are not looking at a full developed in-house bank yet.
Okay, so somehow a third party that will arrive and just set it all up for you and takes on the whole implementation if there is any, and plug and play, as you say, rather than having a whole team of consultants or even some sources within your company that needs to set up the whole thing, program the proper interfaces, and make sure everything is working. Or the other possibility is the bank that does it on your behalf, but you want potentially to have something in-house yourself.
You have to look at what is the advantage for your corporates and what can fintechs in the market, what can they offer you as a corporate? And most of the times the fintech, they could have, let's say, it's a more structured and standardized procedure, so probably less room for customization, but that could also be a benefit. Not everybody needs a super complex setup to perform PoBo CoBo in their corporates.
Okay. And I guess it's a little bit less linked to PoBo per se, but you also have these real-time payments that now it's a thing, right? Those payment tracking solution, I think Swift is working on the GPI. Well, actually, it's live and working already, but not all the banks are connected to this specific solution. But I guess anything that enables faster payments, faster reporting, payment tracking, and so on is also something that's indirectly help developing PoBo, or at least enhance it, right?
Yeah, I think if you look at the key drivers, indeed, what helped developing the PoBo CoBo marketplace, let's say, it's first of all the globalization. So there's a lot more, especially corporates are getting a lot more suppliers and customers in a wide variety of locations. So probably you need in all those locations, you need legal entity, but you don't want a bank account for every currency in all those locations. So I think globalization is a key driver. Secondly, it's the importance of liquidity. So especially in, let's say, the current markets, people and companies are really starting to understand how liquidity works and why it is so important. And here it goes hand in hand with the fact that also treasury is being more and more acknowledged as a really important function within a company. Previously, treasury, we were put a bit, let's say, in just general in the finance team behind the accounting team, and nobody actually knew, hey, the title is treasurer. What is he doing actually? But now it's becoming more and more important, and it's getting its more individual position or place next to the finance department. So everybody understands the importance now of cash and liquidity. And I think that's helping a lot as well, because liquidity and cash is being managed a lot more closely. So people are also looking at those opportunities to optimize that and to get cost savings. And that's where then PoBo CoBo comes in, because it makes it a lot easier. You can get savings like less bank accounts, cost reduction, improved cash visibility, better risk management, centralization of control, all that kind of stuff. So it's, that's one of the key drivers, in my opinion, as well, why now PoBo CoBo is becoming more and more, let's say, standardized in the market.
That's super funny that you mentioned this, but that couldn't be more true. We had recently an episode with the thought leadership of TIS, where we were discussing the strategic role of the corporate treasury function and the corporate treasurer as a role. And it's super interesting to see that, so first of all, cash is king, and actually who is managing the cash? Normally in the most efficient way, well, it's in the corporate treasury department. We had this talk about the data around cash flow forecasting, especially in a period like 2023 or in the COVID phase, right? You want to know where your cash is, when it will come in, when it will go out. And with the evolution of technology, you want to have access to this data because it allows you better decision making. And with the very recent of the Silicon Valley Bank, for instance, we have again this whole risk management and financial risk management function that is becoming more and more strategic, having a proper look at counterparty risk management, wallet sharing. So it's amazing. Well, I have to say, treasury is trendy, right? Lucky us, because we have a corporate treasury 101 podcast, but couldn't agree more. Laurent, I believe, so before your function at Punch Powertrain, you were a consultant, right, in treasury as well. We like to highlight or use an example of the topic we discussed on the podcast. Could you maybe walk us through, anonymized, of course, a use case or an example of a PoBo CoBo structure that you have implemented for your clients? And what I would like to understand here is everything we discussed, basically. How did you set it up and why did you do it this way? What were the benefits for the clients, qualitative and quantitative? And was it fun? I think it's important as well.
No, it always has to be fun. So
absolutely.
We have a few examples because I've did quite some in-house bank implementations, which go hand in hand with the PoBo CoBo mostly.
Mm-hmm.
And maybe as an example, we can go to one of my first clients as a consultant when I was just starting in the treasury industry. And on my side as well, didn't even understand what is PoBo CoBo, what is an in-house bank. But I got thrown in immediately, of course, with the whole setup of an in-house bank, which didn't exist yet at that company.
Perfect.
So at the beginning, of course, we started with scoping what would be in the in-house bank, what would be part of the in-house bank. Would it just be some loans? Would it be cash pooling? And in the end, it became quite a large in-house bank with some pooling opportunities, with some intercompany loans there, and of course with PoBo CoBo. Mainly PoBo, to be honest, but it was quite a large in-house bank already, and we had to develop it from scratch. So that goes from setting up the structure to linking all of the different systems that are needed in order to, first of all, recognize a PoBo, get it in your TMS system, execute it via a payment hub. So we really started from scratch there with basically setting up, who is the main entity in this in-house bank and who will be all of these subsidiaries taking part. So that was the first step, really checking who can take part of this in-house bank. Once that is done, of course, it's the development of the current accounts, because they all, it's a name, it's a bit like a fake IBAN, but you have to give them a recognition point. So we started with developing a very standardized naming convention. So whenever a new subsidiary would be onboarded, they can just follow the same naming convention, and it would be clear for everybody, basically, if you're looking at the position of the in-house bank or the position of the subsidiary. Then, of course, we had to get the PoBo payments. So together with the teams of the company itself, we started developing transmission files and an interface between their ERP system and then also the TMS system, so that we could recognize the PoBo CoBos and that we could execute it. There are always, let's say, two ways. You can either really go through your TMS to recognize the PoBo CoBo and to execute it via the TMS, or you can say no, I will execute directly from my ERP to a payment hub, and I will just send a message to my TMS system to let it know look, I made a PoBo payment. Please book it on the Inas Bank, create the necessary accounting entries, and so on. Because, of course, you need that information not only for your Inas Bank, but also for your bank reconciliation. Potentially, you might need it for forecasting. So there's a lot of reasons why you want the information, of course, to be available in the TMS system.
Yeah, I feel there is the whole setup, but there is also the importance of the information and proper tracking, right? It's not only, okay, we do it, but we also can properly report on it, have real-time information, and be able to, manage the after payment on behalf of who paid what to which entity. So this whole dimension of like transferring the information from one system to another, properly tracking and reporting seems quite central in the setup of a PoBo CoBo.
Yeah, absolutely. It's really the treasury technology that plays a lot. It's building the interfaces, making sure you can transmit files from system A to B. And especially as a consultant, I think the treasury technology landscape is very interesting nowadays. It's developing very, very rapidly. There's, like you mentioned, the fintechs, a lot of new players in the market with very interesting solutions. So as a treasury technology consultant, you always have to stay up to date and you have to know what is playing in the market to see the solution that we present to clients. Is it still best fit for them?
Yeah, absolutely. Okay. In terms of benefits, qualitative and quantitative, what happened for this specific use case?
For the client, it was mainly important to basically have a good visibility there on what is happening. Which loans do I have between my intercompanies? Which PoBos am I executing? And then going further more to the Inas Bank, it allowed them to automate the full interest process. So interest calculation, interest posting, and sending all those entries towards your ERP system is something that was very important for them, and that gave them a lot of benefit and time savings. Because in more advanced TMS systems, there's a lot of scheduling behind it and automated jobs. So going from a very manual process, it is now really a process that could be done 50% more efficient just because of the fact that we had some automated jobs behind it. You could get your market data automatically in the system. Your interest rates would be feeded. Everything else was coming from the ERP system. So your interest calculation at month end was just basically a validation and a control that there were no mistakes made. And then everything else was almost fully automated. So for them, it was really a time saver for the team. It could mean, of course, less FTEs required to manage a treasury, but it could also be like the treasury team being fully overloaded, finally getting room to focus on other topics.
Be more strategic topics than executing payments. Awesome. That's a question I didn't ask actually, but what's the typical timeline of a project, of an implementation of a PoBo CoBo structure? Like how much time does it take typically in your case, but also in general? I guess it will depend on the size of the project, the company, and so on, but more or less an idea?
Very difficult to put a timeline on that. So it can be indeed from a few months to even a few years if you want to cover multiple regions, and you have to do it step by step. So as you mentioned, depending on the size, how broad do you want to use the PoBo CoBo structure? Are you just doing Europe, or are you doing Europe, LATAM, and the US, for example? But it could really take from a few months to a few years even.
And again, if you are in how to say this, not complicated location, but more regulated, and where you need to properly do your benefit case and then decide to move forward with it. But then it might be more cumbersome in certain countries to set this up than in others. So I guess it very much depends on the scope.
Mostly there's let's say a banking rationalization ongoing in parallel as well. If you do it in Inas Bank, you will mostly set up a new cash pool structure, which starts already with checking your banking partners, who is going to be linked to that cash pool. What is my benefit case? What will my savings be? So you see, it can be a lengthy process, but it can be a very important process to keep control over your treasury function.
Obviously, and you might close bank account, right? Which is also one of the first benefits of the PoBo CoBo. So obviously, that's one of the insights. Super clear. Wow, Laurent, thank you so much. Anything else you would like to add on the PoBo CoBo that we didn't mention so far?
No, I think we already discussed quite broadly what PoBo CoBo is, what it does, how it can be used, what are some real use case.
Mm-hmm.
But I think we touched upon the key items without going in too much detail. So everybody going from starting treasurers or starting treasury consultants to more experience, that they have something, they can get something out of this podcast.
Absolutely.
So, of course, always happy to further discuss more details and to make the use case more detailed. But I think for now we have discussed whatever people need to know.
That's awesome. And yeah, I think we have something else locked, right? So we discussed the arm length and the transfer pricing. So, but that will be another episode. No, thank you so much. That was indeed super clear. And yeah, so I mean, from my perspective, well, I'm in treasury, but I don't know much about PoBo CoBo. So that was super insightful. Thank you very much. If people would like to know more about you or Punch Powertrain, where should they go?
I think the quickest way would be to, first of all, to know more about me, the LinkedIn page. So my LinkedIn page, if they want to know more, for example, about Punch Powertrain, there's always the Punch Powertrain website where they can get all the information that they need and they can get, let's say a glance of what we do, how we do it, and where we do it.
Awesome. We'll put all those links in the description of the show. Thank you so much.
Thank you, Guillaume. Thanks a lot. And thanks for having me on this podcast series.